Hey everyone, welcome back to Corporate Decoder, the place where we decode the secret language of corporate filings. Today we're diving into a report from GrafTech International, and let me tell you, it's a bit like watching a favorite stock take a tumble down a flight of stairs. We'll see what's going on with this company that makes graphite electrodes and whether they can pull themselves back up. Alright, so this report is a Form 8K, which is basically an alert that companies send to the Securities and Exchange Commission, or SEC, about important events. This one is dated April 15, 2025, and it's all about GrafTech getting a warning from the New York Stock Exchange, or NYSE. The problem is that GrafTech's stock price has been too low for too long. The NYSE told them they're not meeting the minimum price requirement to stay listed on the exchange. Basically, their stock price has been below $1 for a sustained period, and that's a problem. Think of it like a restaurant getting a bad health inspection score. To be exact, GrafTech is not in compliance with Section 802.201C of the NYSE's listed company manual, which says that a company's average closing stock price must be at least $1 over a consecutive 30 trading day period. It's like failing a class because your grades have been too low for too long. Now, this doesn't mean GrafTech is immediately kicked off the stock exchange. They have some time to fix things. It's like getting a warning before being fired. GrafTech has 6 months to get their stock price back up above $1. To do that, the company needs to have a closing share price of at least $1 and average closing share price of at least $1 as ANVO, and an average closing share price of at least $1 over the 30 trading day period ending on the last trading day of any month in that 6-month period. It's like getting a chance to improve your grades before the end of the semester. One option GrafTech is considering is a reverse stock split. This is where they combine a certain number of existing shares into one new share. For example, they could turn every 10 shares into one share. This would automatically increase the stock price, but it doesn't actually change the value of the company. It's like exchanging 10 $1 bills for a $10 bill. You still have $10. They would need to have their shareholders approve this action. While GrafTech tries to get their stock price back up, their shares will continue to trade on the NYSE under the symbol EAF, but with the added designation BC. This is like a warning label telling investors that the stock is below criteria. The company said that this warning from the NYSE isn't expected to impact GrafTech's ongoing business or how they report information to the SEC. It is important to note that this notice does have risks. GrafTech admits that this notice and the possibility of being delisted could hurt their business, their reputation, and the price of their stock. If they can't get their stock price back up and get kicked off the NYSE, it could make it harder to trade their stock and lower the price even further. Think of it like a store closing down. Fewer people will go there and it will probably lose value. To make sure everyone knows what's going on, GrafTech put out a press release on April 18, 2025, announcing that they received the warning from the NYSE. This is required by the NYSE to make sure everyone is informed. Now, let's zoom out and look at the bigger picture. GrafTech makes graphite electrodes, which are used in electric arc furnaces to make steel. The steel industry is cyclical, meaning it goes through periods of boom and bust, and that affects GrafTech's business. So, what's my take on all of this? GrafTech is clearly in a tough spot. Getting a warning from the NYSE is never good news, and it adds pressure on the company to turn things around quickly. One of GrafTech's strengths is that they're a major player in the graphite electrode market. This gives them some advantages in terms of production and distribution. They've also been working to cut costs and improve efficiency, which could help their bottom line. However, they're facing some significant challenges. The steel industry is volatile and demand for graphite electrodes can fluctuate. They also have a lot of debt, which makes them more vulnerable to economic downturns. And of course, there's the risk of being delisted from the NYSE, which would make it harder to raise capital and could further depress their stock price. Overall, GrafTech's future is uncertain. They have a chance to turn things around, but they need to execute their strategy effectively and hope for some help from the market. Thanks for watching. If you found this decoder ring helpful, please like, subscribe, and leave a comment below. Until next time.